Hello, Richard here on 16th of November, which is a Tuesday, and thus far the trading plan since our last report is going to plan. Just to recap, we've got significant support going back to early 2008, which has been respected by the US dollar. We've had 2 weeks now of this very bullish activity, reversal activity, and the target is moving up towards the descending trend line, which is going way back from June this year. So if we go to a daily chart, you can just see it a little bit better. As it's pushing up, it's gapped up and is working its way towards this red line, which I expect there would be some resistance on, and the target should be 78.65. So what does that mean for the indices? Well, you can see that as the US dollar has been going up, that the indices have been coming down. Reversal candle here confirmed the next day, and thus far we've come down to test the long-standing rising trend line. Excuse me. The Dow is currently trading at 11,150, and volume actually has increased on the way down. So what we'd expect is for this to maybe just come up and retest, which it did yesterday, the trend line, and then push on down to about 11,000 just above. In the event that the market actually rallies back up, if this is a wave forward down, then we'd be looking for that 11,600 as the target. But at the moment, there certainly looks to be more weakness coming out until the US dollar has hit that descending trend line. So from a trading perspective on the Australian market, it's been ongoing and difficult. 2 months now, in fact 2.5 months of sideways activity, a little spike up and then a rapid retracement, not giving much joy at all in terms of trading an indice, but needless to say, this longer term direction might see a little bit further push down towards the 4,600 mark or the bottom of this range. That wouldn't be unsurprising, and then support to lead into late December for a Santa rally towards that 4,800, which of course was hit before, and if it got up that high, then you'd expect it to go through to 4,900, or barring some unbelievably good news, even work up towards the 5,000. But at this stage, clearly we're a long way from the top. Over here, April 26, there's no indication at this stage that in fact it wants to push on beyond this current range that it's trading in at the moment. So the Australian dollar looks a different story, or perhaps not so different, in the sense that this is really a wave 5 completion. It would be fair to say that a top was in place. Looking at the Australian dollar from a weekly perspective, there's an interesting resistance line that can be viewed, which goes back to mid 2007 to June 2007. You can see that it broke through during the GFC and then came back up, retested, and then really tanked. But the point is here that, and it's fairly hard to see on this weekly chart, so we'll go back to a daily, but you can see that it really has hit it very clearly. That's going back to October, November last year. It came up and retested the line, and then here we are again with this very significant doji reversal, and then divergence on the relative strength index, the RSI. Very clear divergence there. That's a lower peak on the RSI with a higher peak on the actual price action, where it tested, all but tested the overhead trend line, this channel line, and then has come back down and actually broken through this short-term rising trend line, created a doji star. So does that mean that we're going to see a bit of upside action? Well, yes, it could possibly. Certainly the weekly reversal line, that's the previous bottom of last week, and it's come down to test that. Obviously the market thinks that's important, and then it's looking like just retesting it at the moment, which is it's about midday on Tuesday the 16th. So wouldn't be surprised to see a bit of upside there, but that's entirely linked again to the US dollar, and I think here is the relevant point, because the gap between this rising bullish action on the US dollar and this descending trend line is really not far away. It should be reached in the next couple of trading days, if not less, and I think that that will mean that from the Australian dollar perspective, it either will continue this cascade down, this stair-step activity that's been occurring, or this doji reversal here will be respected, and we'll get an upside test of parity possibly before a continuation down. So the target in any at any stage, the target notwithstanding any of that, the target is down towards this sort of 96.50 mark would be the target for the Aussie dollar, and failing that, if it did break down, then we would really get some downside action into the 95s, the 95.50. But for the moment, let's just watch the respect on this one, and in the event that it is respected, then we'd look for upside test of parity. On the euro, you can see that the price action has been coming down consistently since it hit its own test of the upper channel, and indeed you may remember this divergence lines here, which is the higher peak on the price action from this one, and the lower peak here on the MACD from this previous peak. So that really has played out quite nicely, and the short activity has been quite extreme, testing the moving average at the moment, but every likelihood that it's going to come down to the 1.345 arena and or area, and then we'd look for a bounce, or perhaps it'll blast through, and that will be the start of a really significant downtrend. This is a chart of the materials, and it's been going sideways since it burst through. This is a daily chart, but slowly but surely what we're expecting to see is we're expecting to see this gap closed, so that would yield a retest on the materials of this trend line here, and which is major support, and in the event that the market is tanking for whatever reason, then you'd see a blast through this line just like it blasted up, and that would be a continuation of the trend to test somewhere around this 1260 mark. So from a trading perspective, on the financials, we've come down, we've broken the channel. Perhaps that can be raised down a little, or even moved, even though that changes the scope. These things aren't often a perfect science, but the channel should look something like that, and they're equidistant, and in the event that we do go into this wave 5 lift towards the end of the year, into Christmas, the Santa rally, then we'd expect this support to hold, and up we go. In the event that it fails, then 4060 would be the target there. Gold, well, it has come off its highs in a spectacular fashion. It's coming down to test the 1357 already. In fact, that target's been hit, but I'd expect to see this grey rising trend line to be tested, and that would give us an indication then whether or not there's going to be a reversal, maybe something like this, a spike low, and then up we go again. But difficult to know at this point. We can only trade what we see, but certainly it's not worth chasing at this point. Wait for this to get some support, and then look and see what it does. If it breaks through, then definitely that would be a short opportunity. And where would it be going? Well, it could be going all the way down to this resistance here at 1240. There's a lot of bulls out there. There's a lot of commentary about gold going to unbelievable targets, and from a contrarian perspective, that gives us a good feel that these reversals are nothing to be surprised about. They often come off when the world thinks they're going to go up, but certainly there's 5 clear waves that we can count to this point here. So 1357 on the downside been hit, and in the event that the support could go as high as 1463, in the event it breaks down, then that trend line at 1250 odd would be the longer term target. Oil, we talked about this last chart, last session. It's come up in these 4 to 5 clear waves now, tested this rising trend line, which was support for oil before, was broken here, was tested here, and then for the third time, very neat test, and came off in really neat fashion. So where's it going? Well, the other thing to point out is that that was an exact 61.8% target that we set some time ago against this low to the top of the third wave, down to the fourth wave. Said, alright, well, what's our target? And it came up and hit it right on the head, and then it's reversed down. So, it just shows the power of Fibonacci extensions against previous support and resistance lines. But that really is it for the day. I think we've got a fairly bearish outlook in the very short term. We'll see support, not quite sure exactly when, but the point is that it should turn around, and then we'd be looking to probably rally up unless something happens in the meantime towards a reasonably good Santa rally. Okay, cheers.